Welcome to Realty Rookies, your ultimate guide to navigating the exciting world of real estate. Whether you're buying, selling, or just curious, we've got the tips, tricks, and insider knowledge to help you succeed in your real estate journey. Understanding the analysis of rental properties is crucial for making informed investment decisions. By delving into the numbers and metrics, investors can assess the potential profitability of a property and determine its viability as a rental asset. However, the process can often seem daunting, especially when complex calculators and spreadsheets are involved. In this video, we will show you how to analyze rental properties without the need for calculators or spreadsheets. By simplifying the approach to property analysis, we aim to make the process more accessible and understandable for all viewers. By breaking down the key components of property analysis in a clear and concise manner, we will highlight the benefits of this simplified approach. Not only will it save you time and effort, but it will also empower you to make confident investment decisions without feeling overwhelmed by technical tools. So, if you're looking to dive into the world of rental property investing without getting lost in a sea of numbers, stay tuned as we guide you through a simplified yet effective method of property analysis. Understanding rental property metrics. When evaluating a rental property, it's essential to consider key metrics that can provide valuable insights into its performance and potential profitability. Three crucial metrics to focus on are cap rate, cash-on-cash return, and gross rent multiplier. The cap rate, or capitalization rate, is a fundamental metric that helps investors assess the property's potential return on investment. It is calculated by dividing the property's net operating income by its current market value. A higher cap rate indicates a higher potential return, making it a valuable metric for comparing different investment opportunities. Cash-on-cash return measures the annual pre-tax cash flow generated by the property relative to the amount of cash invested. This metric is particularly useful for investors looking for immediate cash flow and can help determine the property's profitability in the short term. The gross rent multiplier is another important metric that evaluates the property's value based on its rental income. By dividing the property's purchase price by its gross rental income, investors can gauge how long it would take to recoup their investment through rental income. By understanding and analyzing these key metrics, investors can make informed decisions about which rental properties align with their investment goals and financial objectives. Property location assessment. Assessing the location of a rental property is a critical step in determining its investment potential. Various factors come into play when evaluating a property's location, including neighborhood trends, amenities, and proximity to key locations. Neighborhood trends can provide valuable insights into the future growth and stability of a property. Look for neighborhoods experiencing positive developments, such as new businesses opening or infrastructure improvements, as these can indicate a thriving community with potential for rental demand and property appreciation. Amenities such as parks, schools, shopping centers, and public transportation can significantly impact a property's desirability and rental value. Properties located near these amenities are often more attractive to tenants, leading to higher occupancy rates and potentially higher rental income. Proximity to key locations, such as employment centers, universities, and transportation hubs, can also influence rental demand and property appreciation. Properties located in convenient locations tend to attract a larger pool of potential tenants, increasing the property's rental income potential. By illustrating the significance of a good location through real-life scenarios, investors can better understand how location plays a crucial role in the success of a rental property investment. Analyzing rental market trends. Understanding rental market trends is essential for making informed decisions when investing in rental properties. While complex tools can be helpful, there are simpler methods to analyze market trends effectively. Start by researching rental rates, vacancy rates, and market saturation in the area where you're considering investing. Rental rates can indicate the demand for rental properties in the area, while vacancy rates can give insight into the level of competition. Market saturation, on the other hand, helps assess whether there is room for growth or if the market is oversaturated. It's crucial to understand how market trends influence rental property performance. For example, a high demand for rental properties in a particular area can lead to increased rental income and property appreciation. Conversely, a market with high vacancy rates may indicate challenges in attracting tenants and maintaining consistent rental income. To stay updated with market dynamics, consider subscribing to local real estate newsletters, attending networking events, and following real estate blogs and social media accounts. By staying informed about rental market trends, you can make strategic investment decisions that align with current market conditions. Property condition evaluation. Assessing the condition of a rental property is crucial for ensuring its long-term profitability and minimizing unexpected maintenance costs. By conducting a thorough evaluation of key areas, investors can make informed decisions about the property's maintenance needs and potential investment returns. When evaluating a rental property, inspect key areas such as the structure, systems, e.g., plumbing, electrical, HVAC, and overall maintenance. Look for signs of wear and tear, water damage, pest infestations, and any other issues that may affect the property's habitability and value. Identifying red flags during the property inspection is essential to avoid costly surprises down the road. Common red flags include outdated or malfunctioning systems, structural damage, mold or mildew growth, and deferred maintenance. Addressing these issues promptly can help prevent larger problems and expenses in the future. It's important to strike a balance between the property's condition and potential investment returns. While a property in excellent condition may command higher rental rates and attract quality tenants, it's essential to weigh the cost of repairs and maintenance against the expected returns on investment. By carefully evaluating the property's condition and considering its impact on investment returns, investors can make sound decisions that align with their financial goals. Rental property cash flow analysis. Analyzing the cash flow of a rental property is essential for determining its financial viability and potential profitability. While complex calculations can be overwhelming, a simplified approach can help investors assess cash flow effectively. Start by calculating the potential rental income by researching market rental rates and estimating the property's occupancy rate. Next, estimate expenses such as property taxes, insurance, maintenance, and property management fees to determine the property's net operating income. To maximize cash flow and profitability, consider strategies such as increasing rental income through property improvements or adjusting rental rates to align with market trends. Additionally, reducing expenses by implementing cost-effective maintenance practices or negotiating lower service fees can help boost cash flow. By demonstrating how to make informed decisions based on cash flow analysis, investors can evaluate the property's financial performance and make adjustments to optimize profitability. Understanding the relationship between rental income, expenses, and cash flow is key to making sound investment decisions that align with financial goals and objectives. Risk assessment and mitigation. When considering a rental property investment, it's crucial to understand and assess the potential risks involved to safeguard your investment. By identifying common risks and exploring strategies to mitigate them, investors can make informed decisions to protect their assets. Common risks associated with rental property investments include market volatility, tenant issues such as non-payment or property damage, and unexpected maintenance costs. By recognizing these risks up front, investors can proactively plan for potential challenges and minimize their impact on the investment's profitability. To mitigate risks, consider options such as obtaining landlord insurance to protect against property damage or liability claims, implementing legal protections through solid lease agreements, and creating contingency plans for unforeseen events like extended vacancies or major repairs. By having these safeguards in place, investors can better manage risks and protect their investment interests. Empowering viewers to make informed risk management decisions is essential for navigating the complexities of rental property investments. By understanding potential risks, exploring mitigation strategies, and being proactive in risk management, investors can enhance the resilience of their investment portfolio and achieve long-term success in the real estate market. Conclusion. In this video, we've explored a simplified approach to analyzing rental properties without the need for complex calculators or spreadsheets. By breaking down key concepts and strategies, we've empowered viewers to make informed decisions when investing in rental properties. Recapitulating the importance of understanding rental property analysis, we've delved into essential topics such as metrics like cap rate and cash-on-cash return, location assessment, rental market trends, property condition evaluation, cash flow analysis, and risk assessment. These key takeaways provide a comprehensive framework for evaluating rental properties effectively and maximizing investment potential. As you embark on your property investing journey, remember to consider these critical factors and strategies to make sound investment decisions. We encourage you to subscribe to our channel, like and share this video, and explore more content to deepen your knowledge and skills in property investing. By staying informed and proactive, you can navigate the real estate market with confidence and achieve success in your investment endeavors. If you enjoyed this video, give us a thumbs up and share it with your friends. And remember, we're here to help you every step of the way. See you next time on Realty Rookies, where your real estate adventure begins.